Welcome to another edition of the Economy and Politics Show today, Tuesday, November 3rd, 2020, where we discuss developments around the oil and gas industry. Here's the headline we have for you. Brent oil price dropped below $40. Global oil and gas updates, and the U.S. presidential elections and the oil, gas, and energy industry. We begin with the review of last week's crude oil price regime. As of 3:43 p.m. local Nigerian time on Thursday, 29 October 2020, Brent crude oil slumped by 3.7% to its lowest price level since May 2020, as new lockdown measures came into force across Europe and some parts of the United States of America to fight the second wave of the coronavirus pandemic. Brent crude traded at $37.67 per barrel. A day earlier, Wednesday, October 28, 2020, saw Brent crude oil price sit at $39.12 per barrel. As the lockdown began to take effect across Europe, particularly Germany and France, the demand for oil weakened, resulting in the deterioration of the price of white oil products. Prices have been unsettled throughout last week, pressured by the unexpected large oil inventory buildup reported by the American Petroleum Institute. The Energy Information Administration, EIA, also reported an inventory increase of 4.3 million barrels for the week to October 23rd. OPEC Plus is scheduled to meet on November 30th and December 1st to set policy, which could involve implementing further production cuts and checking compliance of member nations given the weak global oil demand outlook. Nigeria's earnings become threatened as Brent, the oil against which Nigeria's crude oil is benchmarked, drops below $38 per barrel. The majority of Nigeria's foreign exchange earnings comes from oil, and a crash in global oil prices could lead to a drop in the country's fiscal revenues, putting pressure on the country's overall budgetary balance. Let's get on to international oil and gas updates. First, we begin with Exxon Mobil's massive $30 billion write-down. Exxon Mobil recorded a third quarter loss of $680 million, or 15 cents per share, a smaller loss than expected. Exxon's debt has climbed to $68 billion, more than tripled since 2014. But the bigger news was that the CEO, Darren Woods, issued a statement that the company may take a $30 billion write-down, largely related to its North American shale gas assets. Exxon overpaid for XTO Energy more than a decade ago, right before a steep drop in natural gas prices. ExxonMobil also plans job cuts and will keep dividend flat. The oil and gas giant has kept its dividend flat for the first time in nearly 40 years, but with a dividend yield in excess of 10%, the oil major will be under pressure going forward. Exxon will also cut 15% of its workforce, which will translate into job losses of about 1,900. Another oil and gas major, Chevron, has reported small loss. Chevron, on its part, which is in operations, showed a $207 million loss in the quarter in review. Total and Shell also posted profits. Total and its earnings of $848 million in the third quarter went down 72% from a year ago. Royal Dutch Shell, on its part, also reported its analysis and showed that it had a small $955 million profit in third quarter and hiked its dividend. The performance is dramatically better than the second quarter, but down from the $4.77 billion it earned in third quarter of 2019. According to the CEO, Ben Van Beurden, we are starting a new era of dividend growth. OPEC members are reluctant to extend cuts. Three of the biggest OPEC producers, behind Saudi Arabia, may not be on board with the new plans to extend the current cuts into next year. Iraq, the United Arab Emirates, and Kuwait are reportedly not particularly inclined to support a rollover of the cuts of 7.7 million barrels per day, because such cuts are too deep for their economies and budget incomes to sustain. Canadian oil companies have also posted big losses. Cenovus and Suncor Energy both reported modest losses from their quarterly reports, while Husky Energy, on the other hand, reported a huge $5.2 billion loss, showing the impact of the COVID-19 pandemic on the oil and gas industry. Equinor also has written down $1 billion in terms of its impacts, about $2.93 billion on its operations, and this is after it revised down its assumption on long-term crude oil and natural gas prices. The largest portion of the impairments came from a $1.38 billion write-down on its U.S. shale assets. Environmentalists are urging the Biden campaign to use financial regulation to address climate change. That will include using the Department of Treasury and the fiscal policy measures of the U.S. to prioritize climate change. And also, just to let you know that green power has been projected to attract $11 trillion by 2050. You heard that right. Renewable energy has the prospect of attracting a huge sum of $11 trillion in investment by mid-century. So a lot of key stakeholders and investors will be looking in that direction. Let's get on to the next part of the conversation today, which is today's big day, the U.S. presidential elections. It's been talked about across board, and one industry that we're watching closely is the oil and gas industry. It has been described as a historic one between incumbent President Donald J. Trump of the Republican Party and Senator Joe Biden of the Democratic Party, who was the former Vice President of the U.S. The energy industry will be looking at the key directions of both candidates, and this is how it will play out. A victory for President Donald Trump will signal relief for oil and gas players and increase fracking activities in the nation and along other axes. It will also shape investments in the petroleum industry and boost activities for oil majors. On the other hand, a victory for Senator Joe Biden will mark a new dawn for renewable energy, climate change, and investment in clean energy globally. You now know why the industry will be watching closely today's elections. And that'll be all for today's edition of the Economy and Politics Show. You can visit our website, www.WebTVNG.com, to watch our videos, read our news stories, and reports. Till we come your way again. Thank you for watching. Have a nice day and stay safe.